Hey everybody, how you doing? I want to answer some questions from you guys that are selling stock options with us in the Prime program. There is a lot of money being made right now. I'm really happy to report that Bitcoin is just cracking through record highs like crazy. And if you notice, because of many of the stocks that we sell options on inside the Prime program are connected to crypto, that a lot of you are just making insane and ridiculous amounts of money, and I'm super happy for you. This is why you do this. This is why you invest. And if you're not making money, I really like to understand why, because right now making money is kind of like shooting fish in a barrel, and and the market doesn't get any better than this. In fact, the stock market just set a record for 2 consecutive years of ROIs over 20%. That I don't think that's ever happened, or it hasn't happened for a very long time. So it's good in the sense that I know a lot of you are making money if you own assets. The downside is that this those extreme highs can lead to extreme lows and crashes. So I encourage you to make sure that you are prepared. In class, we talk about what those puts do and how they protect your portfolio. Safety first in investing at all times, and but then also if you're not sure how to protect a portfolio, I did a whole training on this called Storm-Proof Investing. So if you go to stormproofinvesting.com, you can take a look and get that training. It's still there. You can have it as yours for life. You can share it with your family. So feel free to grab that from the Black Business School. Now, the first question is, Doctor, do you prefer Robinhood or E-Trade for selling stock options? I use Robinhood. I think Robinhood's easier to use, and I keep an E-Trade portfolio also. So I think keeping your money in separate portfolios is a good approach. Second question is from Steve. Steve says monthly calculation. MU stock moneymaker grid. It seems the monthly income should be calculated by the monthly income from selling the call options that hit the strike price minus the cost of the put. However, I'm coming up with 209, not 288. Please advise. Um, yeah, so when I talk about monthly income with options, I don't subtract the cost of the put at first. At first in the Moneymaker grid, if you log in at drboyceprime.com where the Moneymaker grid is located, you'll see that basically I have the income that comes directly from the option, but then there's also the cost of your protection, the cost of your puts that has to be factored in later. And so toward the end, I do calculate that as well. Next question is from Talise. I have an LLC. Should I continue an account with stock options or just use the account I have with E-Trade as an individual? What will be the difference? Well, if you trade through an LLC, you have much more leeway to write off your options or write off your losses. So that might be a reason to do the LLC route. Stocks went up since the election. What are the best stocks to invest in at this time to do options? I'm starting out with $900. Okay, so if you log in at drboyceprime.com, you will see the Moneymaker grid. The Moneymaker grid shows you the stocks that I'm invested in, that I sell my options on, that make the most money for me. I'm going to do another Moneymaker grid, so we're going to have a class meeting soon. If you'd like to be invited to the next Prime meeting, just text the word options to the number 87948. So make sure you're on the text list. Text options to 87948. Let's see. Aisha says, "Hello, Dr. Boyce. What is a roll down?" A roll down is where you basically are getting out of the previous contract and starting a new one. So think of it like rolling up or rolling down in a relationship. Like you're dating one person, you got to break up with person A and then start dating person B. Or maybe some people do it at the same time. You're not supposed to date two people at once. Some people do that anyway, so it's a bad analogy, kind of, but you get the point. So basically, a roll down is where you see the market conditions have shifted, so you have to get out of the old contract and start a new contract that is much more consistent with what you already had in place. So yeah, so that's what the roll down does, and it's very important. And there are trainings on how to do roll downs. If you log into drboyceprime.com, there's plenty of material there. And if you can't find the lessons and the replays, don't forget we have an excellent support team in the Black Business School that can help you. So just email support at theblackbusinessschool.com. That's support at theblackbusinessschool.com. I asked because I bought a put that passed the strike price. I did nothing. It expired and my shares were bought. I thought I would still have the shares. What happened? Well, if your shares are if the share price is past the strike price, then yes, your shares will be purchased from you. And so that's probably what happened, that your shares got purchased when they went past the strike price. And if that buzzer strikes zero and the stock is past the strike, then that's going to cause the issue. Now, if you're wondering why a lot of the stocks that we talk about in class are doing really well, it's because a lot of them are connected to crypto, like Marathon platforms and another one, Clean Spark, stuff like that. Just pretty much anything that's connected to crypto right now is sky high. It's going berserk. And one of the things we talked about is having those free floating shares so you can protect yourself against FOMO. And so remember, any type of insurance in a portfolio costs money. So if you are afraid that the stock is going to keep going up, then there are instructions, specific instructions on how to address that in your portfolio. You can buy some call options. You can buy some extra shares, but you want to do something so you don't miss out on the rally. Because one of the things that happened is I know some of you sold options on all your shares. So then your stock, someone a student talked to me. She said she bought Coinbase and she sold all of her calls on Coinbase. So then when Coinbase went berserk, I think it probably went up 40-50%. Literally, she was mad because she kind of missed out on everything. And I said, remember in class we talked about buying a few extra shares so that you don't miss out on the whole rally. You can participate and see your money go up as these things happen. Right now, what you're watching is something as of November 11, 2024. You're watching something that is just damn near unprecedented. What Bitcoin is doing, Bitcoin is finally becoming the beast that everyone thought it was going to be. I've been talking about this. It's almost like Jesus coming back, like you've been talking about it, preaching about it forever, and then finally it happens, and you're like, I told you so. So we were talking about Bitcoin doing stuff like this back in 2017, 2018. It just kept running into regulatory hurdles. The biggest hurdle for Bitcoin had been the fact that the regulators just didn't seem to want to support the growth of crypto. It was very strange. And so basically, one of the things that has separated Trump's administration from previous administrations is that he wants Bitcoin to grow. He wants to clear the regulatory hurdles. He's firing Gary Gensler, the chairman of the SEC. Gensler was deliberately sabotaging the growth of crypto by creating a lot of ambiguity in the regulation. They would say, well, is this okay for us to do this, or is it legal or illegal? And they'd say, we got to think about it. So the company had to still keep doing business. And so what would happen is they would start going, so they don't know. They're like, should we go left or right? And they say, I don't know. We're going to think about it. So then they go left. And then 5 years later, they come back and they say, we're going to sue you because you went left. I never understood that. That was the weirdest regulation I've ever seen in my life. Thank God it's changed, and now you're seeing your crypto taking off. If you want to know my 2 cents, I think Bitcoin has a ways to grow. Bitcoin is the kid that's in the eighth grade who's 6'4", and people don't realize he's going to be Shaquille O'Neal. He's going to be 7'2", 7'3" at some point. So if you want to know what I think about investing in Bitcoin, I can't tell you what to do. I do not give investing advice, but I can say that I am buying Bitcoin. I've been buying it for a long time. I'm buying more of it because I think that there's still more room to grow. Let's see, Aisha Edmond. Hey, Dr. Boyce. Okay, you asked about a roll down. Okay, so you asked about a roll down. Yeah, we talked about what a roll down does. That's how you adjust your portfolio. Log in to drboyceprime.com and I'll show you guys examples. We'll do another example of roll ups and roll downs in class. Let's see. Okay, so Aisha's question. I think Aisha put her question there 3 times. So maybe when you hit submit it, you thought it didn't go through. All right. So the next question is from Arma, who says, "My question is, I have $10,000 saved. Do I start selling options? What with this amount of money?" Yeah, if you have $10,000 saved, it's very straightforward to generate a consistent income selling options. You would probably want to use margin in order to do that, and you can go to the Moneymaker Grid and find some stocks. And one of the things that I did in class, and we do this exercise regularly, is I show you how to create a little business that is cash flow positive from day one, that requires no work at all, that's completely liquid. So if you got $10,000 or more saved up somewhere that you can put toward that strategy, it's very straightforward. There's numerous examples. So if you log in at drboyceprime.com, you can see exactly what I would do with that money. Now, some of you have a lot of money saved. Some of you have $500,000 saved. I don't. First of all, let me say this. If a person saves that much money or has that much money in their retirement account or can borrow that much money or can get that much money from an inheritance or something, it's very easy for them to make more money than than a college graduate, more money than a surgeon in some cases by selling stock options and being very conservative in their approach. And so the methodology, the proprietary methodology we use in the Black Business School is one that I use to make my own money, and I like it because it's good money, it's safe money, it's liquid money. It also doesn't require me to get up and go to work at all. So remember, it's a myth to think that you have to go to work to make money. There are hundreds of you that are in class that are already making money without working, so it's very doable. So just log into drboyceprime.com and look at the examples that are there. Talk to the support team. The email address for support is support@theblackbusinessschool.com. So email them and they can kind of help you figure out what's going on and where everything is, and just stay with it. We got Prime 101 also inside your login, so you can find that as well. So next, Hanif. I bought MU stock at 93, sold the calls at strike at 96, and the price shot up to 111. Would you try to buy the stock back for the contract and sell the shares? Well, if you believe in the stock and you like the company, remember that selling options is not the same as buying a stock for growth. There's some cases where we buy for the capital gains. We're buying it because we believe the price is going to go up, and that's how we're going to make our money. Sometimes I buy an asset not because I plan to see it, go up. I buy an asset because it's a money maker for me. It generates income. It's just like if you start a business and you start a bakery, you're not buying the bakery because you're hoping that the value of your bakery is going to go from 50,000 to 100,000. You buy the bakery because you need to have income. Do you understand? There's a difference, right? So the same way you can start a bakery and generate income from the bakery, you can buy a bunch of stock and generate income from the stock and have a substantial amount of income from the stock. So ultimately, if you like MU and you think that that stock is, I know that the options are valuable in that stock. I know that if you buy, a few hundred shares of that stock, you can make more money than a lot of people make by going to work every day, and it's consistent money. You're selling risk basically on the market, just like you sell shoes or socks or anything else. And I know it can work. And really, honestly, if you're trying to generate income and consistency from the stock, you're not necessarily there for the capital gains. But you can get the capital gains, but just know that there's different reasons you might pick the stock. So with my portfolio, I got my long distance runners. These are the stocks I'm buying because I believe they're going to grow and I want to hold them long term, like my cannabis stocks or my stocks on energy. I gave you guys a list of energy stocks that I believe are going to go up. AI, I have a massive investment in AI, but then I also have my sprinters, that are just the ones that are going to give me income this week so I can pay the credit card bill, pay the car note, pay the mortgage, stuff like that. So that second portfolio, I think it's good to have separate so that you have your money in multiple places. I don't believe in putting all your money in one spot. All right, so let's see. Next question. Let's see. Oh, what's the URL? It's stormproofinvesting.com. Stormproofinvesting.com. That's the training on how to protect your portfolio. Stormproofinvesting.com. And also, if you're watching this live or right after I do this, I am going to do an event on Thursday night at 8 p.m. called How to Turn Your Child into a Millionaire. There is a simple, straightforward process that can be taught to anyone who cares about their kids enough to want to do this, or the grandkids, such that if you follow these basic steps, your child will be in amazing financial shape in their 20s, and also the family will be in better financial shape because they're part of the family. So it's family wealth built on behalf of also making that wealth available for the child. So we have three proprietary models that we use in the Black Business School. You won't find these in any textbook. You won't find this taught at Harvard or Yale. You won't find this at any HBCU, because we focus specifically on the Black community and Black wealth. That's what we're like, surgeons on Black wealth. So the three models, one is the KID model. KID stands for knowledge, investment, and discipline. I'm going to take you through that model and break it down for you and show you how to apply it. The second model is what we call the sturdy model, building sturdy children. The STERDY, which stands for systems, technology, entrepreneurship, relationships, and delegation for the youth. That's the second model. The third model is what we call keeping your poise, POISE. It stands for producer, owner, investor, saver, entrepreneur. And so we show you how to apply that model so that your kids don't just have the financial intelligence, but they also have the wealth levels that they need to do what they want to do. And if your goal is to say, I want my child to be a millionaire by 40, there's an easy snap formula that can be applied that will make that work, and it's not anymore, it won't be any harder than the fact that you've been paying your cell phone bill every month for the last 30 years. You've been paying your car note on time for the last 20 years. You've been paying your rent on time every month for the last 20 years. Well, if you invest in your future in the same way that you pay your rent, pay your car note, pay the cell phone bill, then what will happen is that wealth accumulation will give you more money than you can ever possibly imagine. So the big challenge that a lot of Americans have is that we are very quick to pay, to pay the utilities on time and the cell phone on time and all this other stuff, but we don't invest on time. We don't pay ourselves on time, right? So this is all this is. This is an extension of what you're already doing. I just want you to do it in a way that's going to benefit you and your family and not just benefit the car dealer, not just benefit the student loan people, not just benefit the landlord. Okay. All right. So let's see. Next, Eric says, I've been a Prime member. I've been in the program for a while. Getting started has been challenging. I'm anxious about pulling the trigger on the 60K saved. I review E-Trade and Robinhood. My questions are, what do you think about Tasty Trade platform and Webull? I don't have anything against Tasty Trade and Webull. It's just most of the examples in class are done on Robinhood because I find that to be the most user friendly based on the models that we're applying. I think that if you're nervous, maybe what you can do is if you email support at theblackbusinessschool.com, maybe we can do a one-on-one if you want to do that. That I think that's worthwhile if you're trying to be really cautious. And again, while investing always involves risk, and this is not investing advice, what I can do is I can show you exactly what I do with my portfolio, and I can show you exactly what I would do if I really want to maximize safety, right? Because safety is important. A lot of people get caught up and they start making money, they get excited, and then they forget to protect what you have. If you don't protect your wealth, you're gonna lose it, right? So you get a stock, you own, I don't know, 100 shares of, or let's say 100 shares of Coinbase or something, and you're selling the options for $8, $9 a piece. So you're making, $4,000 or $5,000 a month in income, and then you forget to protect your capital base. So what then happens is the stock, it gets volatile on you and it dips, and then next thing you know, you've lost tens of thousands of dollars. And so this is one of the reasons why you don't hear me talk a lot about things like day trading, because I haven't found day trading to be a consistent moneymaker for a lot of people. Most people don't make consistent money from day trading, but there are ways to easily make consistent money selling stock options if you know how to manage risk. And that's pretty much what I did all through my PhD program was learn how to manage risk. And I studied from a guy. I studied under a guy named Renee Stoltz, who was known as one of the greatest risk management experts on the planet. And I proofread his whole textbook. So I spent a lot of years thinking about risk. And I think that's the key, right? I don't believe in gunslinging with your investing. I think that one of the reasons people are afraid to invest and people hate investing and they think it's evil is because they got introduced to investing in the wrong way. It's almost like people who are afraid to have sex because something bad happened to them when they were young that shouldn't have happened, if you know what I mean. Well, I don't want you to get screwed. I don't want you to go into investing and sort of, hate it because you had a bad experience because you got you invested in your cousin's blessing loom, or you got pulled into some crazy crypto that wasn't going to make any money, or they got you invested in penny stocks. These obscure, horrible investments that end up losing your money. I want you invested in places that are safe. I want you invested in strong companies. I want you to be in a position where you know how to vet your investment, things like that. And anyway, for those of you that are curious on how to go about maybe finding a process for selecting stocks, I did a training on basically an 11-step process that a person could use to decide if a stock is a fit for them. And I did that. I think that the training is available at thedrboycemethod.com. So feel free to go to thedrboycemethod.com, and all the materials from that whole training are available to you and your family. You can share it with your family, whatever you'd like to do. So thedrboycemethod.com. Next, okay, Damon says, with margin and leverage, what are the ramifications if an investment goes sideways? Is that real money that I owe? Can I continue doing business with the broker? Yeah, margin and leverage are fine. See, the thing is that these brokers will give you leverage, but they're not giving their money away for free. They're not out here taking crazy penitentiary chances with their money. They'll support you, but they are very careful in terms of making sure that that the amount of support they give to you in terms of money that they loan you to make an investment is connected to the quality of the investment. So if you're investing in a really risky stock, sometimes they'll say, we're not going to give you any margin. But if you're making an investment in Microsoft, then they'll loan you half of the money, which is pretty cool. That means you could buy more shares for that amount of money. So you are levered. Leverage is not bad. Leverage is not good. Debt is not bad. Debt is not good. Debt is powerful. That's all it is. That's all it is. So, when you hear Dave Ramsey or somebody say debt is bad, get rid of debt, debt free, debt free, debt free. Debt free living is not always the best approach if you have great investment opportunities in front of you. So, don't ever let anybody tell you that debt is bad or debt is good. Debt is just a thing. Debt is like a gun or a car. Cars are not good or bad. Cars can change your life in a positive way or they can kill you. Do you understand? Like there's a difference between the two. So what I would say to you is that if you use margin and leverage, in my view, you want to really, really assess your risk, minimize your risk. We have numerous examples. You log in Prime, there's 1,000 examples on how to minimize the risk, what to do if you get a margin call, how to deal with situations that the stock shoots up or the stock shoots down, or you want to switch out, or you want to do something with the puts. All that's in there. So use that material because there's lots of examples there. If you're not sure what to do, log in at drboyceprime.com and check the work on Prime 101. Prime 101 will get you there. That'll kind of get you there from the beginning, kind of like a boot startup kind of thing. All right, so let's see here. Damon says, why wouldn't you just sell puts to get the premiums to protect the asset instead of paying a premium to protect the asset? I'm really confused about the significance of being able to sell a put. Okay, so when you sell a put, what you're doing is you're selling insurance. That's what you're doing. So you're selling someone you're selling someone the right to sell their stock to you for a certain price on or before a certain date. So that's like when you buy a car, you buy car insurance, and someone sells you that insurance. So when you sell a put, you are the insurance broker. And a lot of times you might sell a put because either you think that the stock is going to go up and that the premiums are never going to get cashed in, or that they're never going to actually force you to follow through because the price goes up instead of down. Or maybe you sell a put because you want the price to go down and you want to get a hold of the stock. You don't mind taking possession of the stock. So selling a put is very different from buying a put. Just like buying insurance is very different from selling insurance. The buyer of the insurance is looking to get rid of risk. Do you understand? The seller of insurance is looking to take on risk, right? So think of risk like a weight, like you're carrying this extra weight. So somebody it says, "Hey, I'll pay you $10 to carry my books home from school." So that allows them to feel lighter going home from school, and you're carrying the extra load, but you're being compensated for that. So remember, I want you to go through the material. If you log in to drboyceprime.com, Prime 101 goes all through how puts work, calls work, the difference between the two, the different ways you can interpret the use of calls and puts, and how they fit into your strategy of achieving the main goals of Prime, which is to generate consistent income that's very, very safe. So it's income that is consistent. If you have consistency and income and it's all safe, then you've achieved the goal. All right, last question. Damon says, please explain puts a little bit cleaner. Okay, we already talked about puts. So we already answered that question. Okay, guys. So I'm gonna let you guys go. Make sure that if you want to get material for when we meet for class again, just pull out your phone, text the word options to the number 87948. Text options to 87948, and I'll send you guys a link to let you guys know when we're gonna meet for Prime class again. And right now, I'm telling you, this is just a beautiful market. There's so much fun stuff happening here, and congratulations to all of you as you're making all your money. This is where your patience has paid off. So I'll talk to you guys later. Have a good night.